Hello future millionaire and welcome to our video. Enjoying old age with peace of mind and financial stability to pay monthly bills is the dream of many people. For this, it is important to plan your retirement and thus enjoy this phase of life. Those who start thinking about it too late will need to make a much greater effort. Leaving it for later means compensating for the money that could have been saved earlier and, of course, the interest that failed to accrue. So, have you started thinking about this issue? In this text, we will present you with the 10 best tips for planning retirement. Leave your like and subscribe to our channel so you don't miss out on amazing tips like this. 1. Start planning as soon as possible. Investing in pensions from an early age is a great decision to plan your retirement. Remember that the sooner you invest, the smaller the monthly amount you will need to apply. Not to mention that your return will be much greater in the future. Never forget the importance of thinking about your future in advance. Plan and organize yourself from now on to conquer all your financial goals with peace of mind. 2. Define your objective. Any type of planning starts with a goal. Retirement is no different. The first step is to define where you want to go. Stipulate when you intend to retire, with enough time so that your effort to accumulate the resource that will be used in retirement is not too great. Don't do anything on impulse, as retiring suddenly will certainly cause you financial problems in the future. By defining when to reach your goal, you will have an extra motivation to work productively. The sooner and more you invest, the greater the amount received monthly in your retirement. 3. Know which recipes to count on. To plan a peaceful retirement, know what income you can count on. Social Security is a compulsory regime, that is, every worker contributes, and is administered by the National Institute of Social Security, INSS. The value may vary according to the contribution made over the years, limited to a ceiling, maximum amount received. In addition, the start of retirement depends on age and contribution time. For this reason, it is necessary to rely on other sources of income such as a corporate or individual pension plan. Private pension is an investment that complements Social Security and guarantees a retirement with money in your pocket. In this plan, you are the one who chooses the amount and periodicity of the contribution, in addition to deciding when the redemption will be made, as long as it is within the minimum grace period. Find out which modality is best for you. 4. Make estimates. To plan accordingly, make estimates of how much you will need to maintain your standard of living. In this survey, count on expenses such as housing, food, health, and leisure. You can include other expenses according to the lifestyle you intend to have in retirement. With this, you will know what your income should be when you retire. Attention, it is common for retired expenses to drop by up to 20%. However, this is not a rule, taking into account that some costs decrease while others increase. The important thing is to always keep in focus which life projects you intend to carry out. 5. Calculate the reserve that will be needed. After you already have an idea of the amount you want to have as soon as you retire, you need to calculate the size of the reserve you need to accumulate so that you can maintain that monthly income in retirement. To make the calculation correctly, it is necessary to take into account the profitability net of taxes and fees, as well as the real income, which considers the effect of inflation. Of course, stopping to do the math can be a little complicated, so it's ideal to have a qualified professional help with this task. 6. Plan your savings. Your total retirement income may not be enough to guarantee the standard of living you intend to have. In these cases, saving can be an alternative to acquiring adequate equity. Calculate how much is left to reach your goal and start saving money. Stipulate which investments are best suited to gather the necessary money, but take into account important points, such as inflation. Having defined and analyzed all these points, it is time to put the plan into action. Develop a good saving strategy and respect deadlines and values. After all, you are saving for your own good. Make sure that you will be able to achieve the stipulated goals within the time frame. 7. think about other investments. In addition to Social Security, long-term investments can be a great way out for people who are already thinking about retirement, remembering that the investment will vary according to the investor's profile. The stock exchange, for example, is a long-term investment that brings the possibility of a more expressive return, but does not provide a guarantee. There is still a chance that profitability will be bad. Therefore, it is essential to pay attention when choosing which asset to invest in. Treasury Direct is another option, as investments in public securities have an extremely low risk and can guarantee good returns. 8. Evaluate the real estate issue. Are you one of those who think about investing in rental properties? So try to think about the situations in which this option is advantageous. For example, it is no advantage to finance a rental property due to the high interest rates still charged in Brazil. Therefore, the return value of the rent would not pay the financing installment with the built-in interest. However, if you already have a property, you can consider it as a great income option at the time of retirement. 9. Keep your contributions regular. Maintaining frequent contributions and regularity in your investments are essential to plan your retirement and have financial stability in the future. It's no use investing a lot in a month because you have money left over and leaving the matter aside for the next semester. Routine is, without a doubt, the big secret for people who want to reach retirement in a peaceful way. Therefore, always maintain the regularity of your applications. 10. Review your strategy. Financial planning needs to be reviewed after a while and checked if it is within the strategy. Analyze if you are reaching your goals, and, if the analysis answer is negative, you need to adjust your plan. Having trouble saving? If this happens to you during your plan, save more whenever you can. That is, if in a given month you receive an extra amount, save a part to compensate for the difficult periods. In some cases, when there are problems in planning for retirement, it is necessary to postpone the dreamed moment. So that this does not happen, pay attention to the tips given and assess whether it is not more advantageous to reduce your retirement standard of living or adjust your current lifestyle. That way, it may not be necessary to postpone retirement. In any case, analyze the situation and see what is the best retirement plan for you to achieve your dreams and goals. Remember that the sooner you start planning for retirement, the more you will be able to save and the less effort you will have to reach your goal in the future. After all, financial planning is essential for your life. Thank you for watching this video until the end. Share this video with people who need this type of content. Don't forget to leave your like, subscribe to our channel, and turn on notifications so you don't miss any of our tips on how to get rich in 2023.